Welcome Cryptopians to Total Crypto Updates, bringing you another video for real deep dives into the crypto industry. Please remember to like, share, and subscribe to help the progress of the channel and community. I can't promise to only speak about crypto, but I can promise everything will be understood. Let's dive into today's very dense crypto update.
A very old Bitcoin wallet from when Bitcoin first started in 2009 moved 150 Bitcoin after being inactive since 2011. This wallet had collected 4,000 Bitcoin in the early months of Bitcoin's existence. The 150 Bitcoin that moved is worth about $16.7 million today, but when the wallet was last used, it was only worth $67,724. The entire wallet is now worth $442 million, showing how much Bitcoin has grown in value over the years. When old Bitcoin wallets suddenly become active again, people in the crypto world pay close attention because it happens very rarely. This often makes traders and experts wonder if the owner might sell their Bitcoin. This happened while Bitcoin's price went up 2.24% in one day, but there are signs that the market might go down. The fear and greed measurement shows that people are scared, partly because there was recently a huge event where $19 billion worth of crypto investments were lost. The wallet owner might have moved the Bitcoin to a safer place, for legal reasons, or just to test if it still works, rather than planning to sell it. In the past, similar events in 2021 and 2023 turned out to be just reorganizing, not selling, and didn't cause Bitcoin's price to drop much unless the coins went to exchanges where they could be sold. At the same time, another very old crypto holder traded almost 36,000 Bitcoin worth $4.04 billion for 886,371 Ethereum worth $4.07 billion. This helped Ethereum's price, and big Ethereum holders are also buying more. These activities show that early crypto investors are moving their money around, possibly preparing for changes in the crypto market, but experts don't think this will cause immediate problems for Bitcoin's price. Also on Bitcoin, Bitcoin serves as both digital gold and a global currency in today's financial landscape. Its appeal as digital gold comes from its 21 million coin supply limit, preventing inflation like physical gold's scarcity. The halving process every 4 years reduces new coin production, while decentralization protects against seizure or censorship, making it a hedge against currency devaluation and excessive money printing. This has attracted support from figures like Senator Cynthia Lummis, who proposes using gold sales to fund a Bitcoin reserve, and Binance's CZ, who predicts Bitcoin will exceed gold's value. As a global currency, Bitcoin enables instant, borderless transfers without banks, particularly valuable in regions with limited banking or unstable currencies like Argentina and Nigeria. Its divisibility into 100 million satoshis supports various transaction sizes, while the Lightning Network enables faster, cheaper payments for everyday use. However, Bitcoin faces volatility challenges, with prices fluctuating dramatically and hindering stable pricing. Despite this, adoption grows with countries like El Salvador adopting it as legal tender, payment platforms like PayPal integrating it, and institutions holding it as reserves. Analysts believe increased adoption will reduce volatility, helping Bitcoin mature into a more stable asset. Moving on to Fortress Trust, now Elemental Financial Technologies Inc. On October 22, Nevada regulators ordered Fortress Trust to cease operations due to insolvency. The company owes clients over $12 million in fiat and cryptocurrency but holds only $1.2 million in assets. Fortress cannot process withdrawals and failed to provide required financial documents, affecting 250,000 plus clients. The firm's troubles began before CEO Anthony Botticella's December 2023 appointment. Founded by former Prime Trust CEO Scott Purcell, Fortress lost nearly $15 million in a September 2023 phishing attack via vendor Retool. Ripple initially agreed to acquire Fortress and provided $15 million to reimburse clients but withdrew from the deal 20 days later. This action reflects Nevada's increased oversight of crypto custodians following Prime Trust's collapse, which cost clients over $80 million, and extends to other entities like Robinhood, which faced event contract restrictions led federal agencies like the Federal Reserve, FDIC, and OCC to release new guidance mandating stronger insolvency protections and risk disclosures for smart contracts and blockchain technology. Next we have digital asset treasuries drawing roughly $800 billion in retail investment funds away from the altcoin marketplace, as reported by cryptocurrency market analysis company 10x Research. This movement of capital has resulted in diminished liquidity, reduced momentum, and weakened confidence within the altcoin space, despite growing anticipation for an upcoming altcoin rally. Market experts observe that Korean individual investors, who were once significant participants in altcoin trading, have redirected their attention toward American cryptocurrency equities, adding to the subdued nature of the altcoin environment. Consequently, altcoins have lagged behind Bitcoin's performance by approximately $800 billion during this market cycle, leading individual investors to seek other opportunities for rapid gains. Technical analysis reinforces the clear shift of investments returning to Bitcoin. The technical altcoin framework from 10x Research identified this transition 2 weeks prior to a substantial altcoin decline on October 11, 2025, which occurred after a $19 billion cryptocurrency market downturn that interrupted altcoin progress. The altcoin season metric from CoinMarketCap currently registers at 23, indicating a continued Bitcoin season, since it falls short of the 75 level needed to declare an altcoin season. Nevertheless, the recent liquidation occurrence might create an attractive entry point, potentially propelling Bitcoin toward $200,000 before the year concludes, according to Jeff Kendrick, who serves as Standard Chartered's global head of digital assets research. Bitcoin strikes again. The Bitcoin exchange traded funds witnessed a rebound with collective inflows totaling $20 million, representing an encouraging turnaround following previous withdrawals. The surge was largely fueled by capital flowing into prominent Bitcoin ETFs, notably BlackRock's iShares Bitcoin Trust, IBIT, which attracted $12.4 million in new investments, alongside Fidelity's Wise Origin Bitcoin Fund, FBTC, which captured $8.2 million. Additional strong contributors included ARK21 Shares Bitcoin ETF, ARKB, drawing $3.1 million and Bitwise Bitcoin ETF, BITB, securing $2.5 million, though Grayscale's Bitcoin Trust, GBTC, bucked the trend with continued outflows of $6.1 million. These figures demonstrate renewed market confidence in Bitcoin despite volatile market conditions. Meanwhile, Ether has been experiencing significant weakness, with its value falling beneath $2,400 while confronting selling pressure from macroeconomic headwinds and regulatory ambiguity. Ether-based ETFs have similarly underperformed, registering net withdrawals of $15 million during the corresponding timeframe, revealing a stark contrast between Bitcoin and Ether investment products. The decline in Ether's value stems from widespread cryptocurrency market instability, encompassing worries about monetary policy changes and global political tensions. These trends highlight Bitcoin ETF's ability to maintain institutional appeal even amid widespread market difficulties, suggesting increasing trust in Bitcoin's role as a wealth preservation asset. Conversely, Ether's weakness indicates elevated risks facing alternative cryptocurrencies, carrying important consequences for portfolio diversification approaches and the wider acceptance of digital asset investment products. Onto an explosive report. First Lady Melania Trump has not been named in a federal lawsuit filed in Manhattan on October 23, 2025, which accuses executives of the Meteora exchange of orchestrating a pump and dump scheme involving the $Melania meme coin. The allegations claim that trades were arranged to inflate the token's value before its launch and then dump it, leading to significant market volatility. Public disclosures on the token's tokenomics are limited, with observers noting that opaque supply schedules and concentrated holdings can exacerbate price swings and distort secondary markets. The Melania token experienced a sharp market spike, reaching a peak of nearly $13.73 before collapsing to about 10 cents, as recorded by market aggregators. For comparison, a related Trump token peaked around $45.47 and later traded near $5.79. These rapid fluctuations mirror patterns seen in other meme coins, raising concerns about investor excitement versus skepticism. Following that report with President Trump's pardon of Binance founder Changpeng, CZ, Zhao, causing crypto price surges. BNB rose 4% to $1,127, while Trump-backed WLFI token jumped 12.5% to $0.142. Other related tokens also gained significantly, sparking discussions about Trump's crypto industry ties. Zhao served 4 months in federal prison after pleading guilty to money laundering violations in April 2024, following Binance's $4.3 billion fine settlement. The pardon clears his record and may allow his return to finance. The White House called the original case government overreach. Binance lobbied for nearly a year for the pardon, highlighting Zhao's cooperation and compliance improvements. The exchange also received a $2 billion investment from Abu Dhabi's MGX. Zhao thanked Trump on social media, receiving support from crypto industry leaders. Next, let's talk about the Solana price, which is currently trading around $140, caught in a prolonged stalemate between buyers and sellers. This equilibrium is evident from the price's failure to break above the $150 resistance level despite multiple attempts, while also holding steady above the $130 support. Key technical indicators highlight this tension. The Relative Strength Index, RSI, is neutral at 50, indicating no clear momentum, and trading volume has remained subdued, reflecting investor indecision. On-chain data supports this, showing a balance in network activity with daily active addresses stable at approximately 1.2 million and transaction volumes averaging 50 million per day, but without significant growth to signal a breakout. A sharp price break could resolve the current deadlock, with two primary outcomes outlined. An upward breach above $150 might trigger a rally toward $180, driven by renewed buying interest and potential positive developments in Solana's ecosystem, such as increased DeFi adoption or NFT activity, which have historically correlated with price surges. Conversely, a downward break below $130 could lead to a decline toward $110, exacerbated by broader market pressures or reduced network utility. The article notes that Solana's total value locked, TVL, stands at $4.5 billion, underscoring its resilience but also vulnerability to external factors like Bitcoin's performance. Moving on to JP Morgan or Chase, is set to allow its clients to use Bitcoin and Ether as collateral for loans, marking a significant step in integrating cryptocurrencies into traditional banking services. According to a report, this policy change will enable wealthy clients to pledge these digital assets to secure financing, potentially unlocking liquidity without needing to sell their holdings. The move comes amid growing institutional interest in crypto, with JP Morgan previously exploring blockchain technology and offering crypto-related services to select clients. Key details include that the collateral will be held in custody by the bank, with loans structured to mitigate volatility risks associated with cryptocurrencies. This development follows regulatory advancements and market maturation, positioning JP Morgan as a leader among major banks in bridging traditional finance and digital assets. Implications include increased accessibility for high-net-worth individuals to leverage their crypto portfolios, while maintaining compliance with existing financial regulations. The announcement underscores broader conclusions about the evolving role of cryptocurrencies in mainstream finance, potentially encouraging other institutions to follow suit. However, it also highlights ongoing challenges such as price fluctuations and the need for robust risk management frameworks to ensure stability in lending practices. Thank you for watching. There will be more videos on the crypto world. We try to buff out the FUD and keep everyone's attention on development and important events in the crypto world. The tech is amazing and understanding it can take you a long way.